No matter what happens in the US presidential election, there will be a changing of the guard in Washington. So how will this change how you invest? So Audrey, historically speaking, which tends to be better for the stock market? A win by the Republicans or a win by the Democrats?
So generally speaking, during elections year, the stock market tend to do reasonably okay. It is also in the vested interests of the incumbent to ensure that the economy is doing well in order to boost its odds of him or her being re-elected.
Let's put that into context. There have been 24 presidential election years since the S&P was founded. 20 of those years saw positive returns, and returns in an election year were around 10% above the average for all years.
Let's now talk about the Democrats for a moment. What would a second Democrat term mean for investors?
Probably more of a status quo, and we may see a continuation of existing policy. So what this means is we're probably going to see them going after the big tech companies with antitrust regulations. They're still going to maybe complete the last final stages of Basel III, basically asking banks to boost their capital requirement, capital adequacy. So a lot of the policies that is ongoing today will probably continue into the second administration under, say, a Democrat president.
Joe Biden has dropped out of the race, and his Vice President Kamala Harris has stepped in his stead. Now, if she wins not just the ticket but the White House, what kind of impact could we see in the markets?
I think markets are expecting a lot to be coming out from her over the following few weeks or so. I think it's still too early to tell for now in terms of the impact on markets. I think we will probably need to see her being confirmed as a Democrat nominee at the Democratic Convention to be able to better ascertain what sort of market impact will this combination bring.
Any specific sectors that will benefit under a Democrat administration?
I would say that the green sector, things relating to renewables, things relating to clean energy, will likely continue to benefit under a Democrat administration, given that they tend to be a bit more sort of climate friendly versus a Trump administration.
On the other side, what will a Republican win mean for equity markets and investors? Are there specific sectors there that will benefit from a Trump 2.0 presidency?
We are likely to see him continuing to act tough on his trading partners, especially when he sees cases of unbalanced trade with the US. So that is likely to come into play as well, and potentially injecting some uncertainty, I would say, with regards to international relations as well and foreign policy. The immigration policy is still probably front and center for him, quite a key concern. And some of his proposals include, mass deportation of undocumented immigrants, as well as stricter immigration controls at the border security. So if those were to come in fruition, from an economic perspective, we might well see a tighter job market than it is today. And what this means is, if it comes to monetary policy, we might see, the Federal Reserve being unable to ease policy as much as they would like to. So from an economic perspective, there could be some negative repercussion were that to happen.
So given all of this in the environment we're seeing today, how should we as investors position our portfolios in this current time?
From our perspective, elections tends to have only a short-lived impact on markets over the long term. So across our investors, we've been empowering them to maintain a diversified balanced allocation. That includes some exposure to equities, bonds for defense as well a little bit of cash and gold.
Would you say now is a good time for investors to play defensive?
I think it depends on the policies that the new president eventually put in place, as well as the sequencing of policy. So if assuming that Trump were to be a president, for example, whether the Republican Party also secure the Congress is also a big question mark. If Trump were to be re-elected and the first policies he pursue is one of tax cuts or extension of tax breaks for that matter, then the market will react quite constructive and risk asset will likely do well on the back of that. If, however, he were to come in and his top priorities or first priorities were to be those relating to imposition of trade tariffs, as well as immigrations, then the market is probably likely to react quite negatively on the back of that, because that is likely going to trigger some inflationary concern on the back of a further tightening in Fed policy, as well as on higher inflation. So I think net from an investor perspective, to us, it's key to remain just invested, regardless of some of these short-term headlines that we get, whether is it from an election front or economic front, because eventually markets do tend to go up more often than it goes down, at least over the long term. And from our perspective this year, we continue to be overweight on global equities. That's still one key area we like, because earnings has continued to look quite resilient, and we expect a soft landing in the US. And then some of the key sectors we like include technology, communications in the US, and the sectors that we are underweight on is in the real estate space.